This is nuts. We've just heard that First Republic Credit, or FRC Bank, is now potentially about to get seized by the US government. Now, First Republic has been one of those hot button bank names that came up during the SVB bank collapse. It's also one of Jim Cramer's historically horrific, unbelievably bad calls that if you just simply counter traded or shorted when he claimed he liked it, you'd be incredibly rich. But beyond that, what you need to understand is there is an almost unbelievable thing happening behind the scenes right now, where big banks are being told by the US government, either you bail out First Republic Bank and spend a few $1 billion now, or you could be hit with tens of billions of dollars in special assessment fees from the FDIC if this bank goes into what's called receivership, when the government takes over and tries to minimize damage, minimize bank runs, etc. Go ahead and listen to this clip from CNBC that just got aired about an hour ago. You're not going to believe what you hear.
And the answer is, the coercion that was set to happen is basically the pitch. If you don't do this now and take a hit to the tune of several $1 billion in total for all the banks, then when this thing goes into receivership, the FDIC special assessment fees that you're going to have to pay could be the tune of $30 billion.
Right.
So it is in your financial interest to save First Republic now.
So what is it, Chase? What is it, Wells Fargo, Bank of America, Citigroup? Are you going to pay a few billion now, or are we going to have to come and smash you to the tune of 11 figures down the road? It's a pretty easy equation when you think about it, and it's an easy decision for these banks. What happens when more banks fail? Really, there's only two logical outcomes here. First is that the banks bail out First Republic, and that could mean some fear on the horizon for other banks because they realize, hey, look, the government's not stepping in to save these banks, and we're going to have to save ourselves. This could cause some panic among the mainstream investing public, specifically in the commercial real estate world, where most of those players bank with regional banks. We all know that this crisis was created by the government, and now it seems like the government is kind of trying to tippy-toe their way out of the room when it comes to fixing it. So option one is that the government does not step in, and that means that banks could start getting some real fear, uncertainty, and doubt. This could lead to mass withdrawals across not just some banks, but many banks, potentially all at the same time across the nation. The other option is that the government starts to fire hose that money, back the truck up, and save the old economy that they've ruined. And that, of course, means that this should be bullish for risk assets, but bad for inflation. Again, more bank instability, more bank fear, whether the government saves those banks or not, is an incredible advertisement for Bitcoin. A huge realization that people's money in the bank is not real at all. And this should be absolute rocket fuel for the Bitcoin and cryptocurrency movements. In my opinion, this is beyond a shadow of a doubt one of the biggest moments for Bitcoin to show the power of a decentralized, immutable, and transparent asset, the hardest money ever created. Now, will it be scary? Yeah, it certainly will be. But in the end, the risk of not owning Bitcoin has started to become so dramatically and astronomically higher than the risk of the volatility of Bitcoin going up and down over time. In my opinion, personally, not financial advice, I believe that anyone should be looking to get some exposure to this industry, and it's time to start sizing up the narratives that will define the next era of crypto. I'm very excited to do that with you. If these videos are giving you value, you know what to do. Make sure to watch this video popping up right now as we go through the de-dollarization that is taking hold across the world, what it means for the American US dollar, and what it means for Bitcoin and cryptocurrency. It's a very crazy time where bank instability could spell out a brave new era for this industry we know and love. As always, I'll see you soon on the next one.